What's good, Josh? Your boy V Voss Official. This video right here is going to be a video for people that want to start looking into how to trade and trading strategies. I'm going to show y'all one of my trading strategies, which is based on support and resistance. I use a minimal amount of like signals and indicators. I don't really use indicators like that. Only indicator I really have active like recently is the EMA indicator, which shows 20, 50, 100, and 200 MBAs. But other than that, so I'm gonna go in and I'm gonna just show y'all some of my own personal trading rules that I try to live by. And if like you've seen my channel, you've seen me talk before, you know, like I'm very big on being a disciplined trader. I believe that is the most important thing more than any knowledge that you can obtain, any indicator. Like if you know what the rules of trading are and how the market works, you understand market structure. I feel like discipline is the most important thing, and that's going to impact where you enter at. It's going to impact where you exit at. It's going to impact how long you stay in the trade. How it's going to impact how much you lose on a trade. Like that's something I talk about a lot as well. I feel like the important thing about being a good trader is when you lose, and you're gonna lose, you're not gonna pick every trade right. It's no strategy or any type of thing that you can look at that's going to allow you to pick the winning trade every time. So it's important with your risk management to know how much you're gonna lose. Like and that's the difference between a good trader and a bad trader. Like if you only got $900 up or $900 in your account, or account over under $1,000, and you're trying to come up and you're putting all of your money into a trade, how much of that are you gonna be willing to lose in one trade? That's your risk management right there. Like you don't want to be putting up $700 and that's all that you have, and then you end up getting into a trade where you end up losing all of the $700, or it expires at zero and you're unable to sell out of it. You don't want to do that. So that's a big thing about trading that I've found. Something I've also personally struggled with is something that I'm working on myself still to this day, which I feel like is why I'm not always profitable yet, but I'm really trying to hold myself to these disciplines, to these rules that I've created. And I feel like if I can do that, you guys will actually see me build my account back up and get to where I want to be. And also, I feel like it can help you get to where you want to be as well. So, like, for sure, like if you never traded before, if you just have like a small experience trading, like this is something you definitely want to check out because it can possibly help to give you some structure. And some of these things are things that I've picked up from other traders that I've studied and watched their YouTubes, watched their clips on Instagram, watched their TikToks, all of that type of stuff. And like I always tell people that are trying to get into trading, like you can get the game for free. It's game all over the internet. It's game on YouTube. It's game on Instagram. It's millions of people that are trying to show you how to trade, trying to show you their strategy. A lot of them are trying to sell you something. I've never bought anything. I'm really kind of self-taught. Like I said, though, like I've studied people on Instagram. I've studied people on YouTube and people that are willing to show their strategy for free. And I'm also willing to show the strategy that I've compiled in my time trading the options for free. I'm not charging anybody. I don't want to charge anybody. Like to me, it's like you're not taking my money. You're not taking nothing out of my pocket by showing you how to do this stuff. So let me get into some of the rules so that I've compiled for myself. So my number one rule, which is so important to me, is know what your plan is before the market opens. And what I mean by that, so for instance, if you are a day trader, which I'm currently doing a lot of day trades, I need to know what my plan is. Typically, what I like to do is I will buy the contracts that on Monday, I will buy the contracts that are expiring on Friday. And I will just day trade those. Sometimes, depending on what I have, I might let it roll over to the next day. But with the amount that I have in my account right now, I'm just simply day trading, trying to build it up. So with that being said, and just being completely transparent with you guys, I've built my account up from like $100, $150 to like over $1,000, and then I started kind of looking for that big trade, looking for that big win where I win like 1,000, over 1,000 in a day versus getting like 300, 200, stuff like that. So um what has been happening with me in my trading journey lately is I start these trades out on Monday. Like I said, I'm buying the expiration date for Friday, and I'm winning these trades, most of them. And then when I'm losing, I'm doing good risk management, and it's like I'm getting to where I need to be, where I want to be, which is to build that very small amount over 1,000, over 2,000, because that's when I can really start making more moves that I really want to make. Um, but so basically, what's happening? I'm winning Monday, Tuesday, Wednesday, and then Thursday or Friday come around. I start getting a little more money, and this is where the psychology of trading comes in. I start getting a little more money. I got more money to work with, and then I start trying to go crazy. I started trying to look for that big win. What can I trade to hit like $1,000 in a couple hours type of thing? And I end up getting anxious. I enter into a bad position, and then I let it go bad, and then I might put a little more money on it to buy more contracts. That's just a strategy that I have that has worked for me sometimes, and I just call it doubling down. So like I might buy 5 contracts, and I might enter into a bad entry point, but I still think it's gonna do what I think it's gonna do, and I might double down, and then now I'll buy them for a cheaper price. But also that contract price is, with what I'm trading, that contract price is like under $1. When I'm doubling down, it might be like $20 a contract, and I'm doubling down just looking for it to get back up to maybe just like over $1. If it get back over $1, I have a nice ass profit. It's worked for me many times, but it has also burned me sometimes too, where I ended up doing that. Now I've put all my money out there on this one trade, and then it ends up not doing what I needed to do in the time frame that I needed to do it in, and then it expires at zero. That's something that you do not want to do. Trust me. Like, you're blowing your account, and I've done that multiple times. So that's something you don't want to do. And so like something I've really been thinking about is perhaps not doing 0 day trade expirations anymore. Just because they've been tending to burn me lately. So doing the 0 day trade expirations have been tending to burn me. So that's something I've been thinking about not doing. Maybe if I do want to trade on a Friday, I just might not trade on Fridays. But if I do trade on a Friday, like I've thought about, okay, so if I am gonna trade on a Friday, especially after I build my account up, instead of buying the 0 day trades, I'm gonna buy the expiration for the next Friday instead. So it's just something that I've been thinking about. But like I said, you want to know what your plan is before the market opens. So you want to know, um, you want to have a plan like for a specific stock. Goes above this, if it goes above this, like you in calls. If it goes below this, you in puts. Like you want to have that plan made out already before the market even opens. Like that's something maybe you want to be looking at in the pre-market, marking the highs and lows, and I'll get into that as well. So that's rule number one. Though, know what your plan is before the market opens. My rule number two, which I try to stick by, but I'm kind of getting away from because I've been doing some back testing, and I'll show y'all on another video as well. But I've been doing some back testing, and I think I may have found something pretty accurate as far as the win rate for what I was looking at. But for right now, though, I will say so. My rule number two is no trading within the first 15 minutes of the market opening. because this is a fact. This is when most fake outs occur. You will see a stock go up in the first 15 minutes from 8:30 to 8:45, and then about 8:45, maybe even about 8:45 to 9 o'clock. Like, you may see a stock going in one direction, and then all of a sudden it just reverses, and it's a liquidation, and it just eats up however much it went up, and it just completely drops in 1 5 minute bar and eats up everything that it just took 15, 20, 30 minutes to get to. Watch out for those fake outs within the first 15 minutes of the market. You just got to be careful. But it's also like, I feel like the first 15 minutes of the market is when momentum is the strongest, as far as a stock moving in one direction. Also, sometimes in the first 15 minutes of the market, that's when a stock might take off in one direction, and it may show no sign of actually slowing down, and it just continues the whole day in that particular direction. So that's just something you got to be careful about. Rule number 3 is be the little fish. Trade with the market. Do not try to outsmart the market. And so y'all have heard me talk about this before. When I say be the little fish, I think about the marine videos where you see the whales, you see the sharks, and you see the little fish that's swimming under the whale and the shark. And every time the whale and the shark eat, the little fish is eating the scraps. As a retail trader, like, that's what you are. You're the little fish. You're not controlling the market. You're not controlling the ocean, the water. You're not controlling how things are flowing. So you want to make sure that you're rolling with that flow. 4. So when it comes to entries and exits, really, I guess really we're talking about entries right here, but you want to review, and it depends on what you're trading. I'm specifically right now, so I'm talking about day trading. When you're day trading, you're just planning on hopping into a trade and getting out the trade in the same day. That's what I'm talking about. So rule number 4, this is for day trading. And this is kind of for your entries, for your exits. So for me, I did not have the 1 minute time frame on here before. I really just added that because that's something that I've just implemented. So I review the 1 minute, the 3 minute, 5 minute, and 15 minute time frames after the first 15 minutes of the market open. I look and verify momentum. I look and verify momentum and which candles are engulfing the other candles. So what I'm looking for, and one thing that I found, looking at the 1 minute and 3 minute time frames, is very easy to determine what the market structure is. And when I say market structure, I mean, is the market going up? Is it going down? Is it creating new highs, lower lows, or is it creating new lows and lower highs? That determines if the market is going up or down, and I'll go over that in another video, as far as the market structure and determining the market structure. But I look to verify the momentum. I'm looking for engulfing candles, or do we have red engulfing candles, or do we have green engulfing candles? And if you don't know what an engulfing candle is, that's when you have, say you have a green candle going up right here, and then that next candle, which is red, that comes after, completely covers that green candle and goes beyond and closes below that green candle. That's a red engulfing candle. A green engulfing candle is the opposite. You got a red candle that's starting here, going down, and then the next candle you have is a green candle that comes up after it, and it completely engulfs the red candle previous to it and closes above the start of that red candle. So that's what I mean when I say engulfing candles. I just broke that down because it took me a long time. I used to hear that a lot, like engulfing candles, engulfing candles. I don't know what the hell is an engulfing candle, but that's what it is. So I look for that because that shows like strength in the direction. Also, kind of a part 2 to this, which is rule number 5, verify if long wicks are pointing up or down. When I look at candles that have long wicks and short bodies, to me, that is like the body of that candle is like an arrow pointing in that direction. So that's what I look for. That kind of tells me also that the market momentum is going in that particular direction where the short body is if it has a long candle wick. Number 6, I use support and resistance zones to help me determine my direction of the trade. Sometimes you might see the market opening up and it might, those fake outs we were talking about. So it might be going up. And if you have like your correct support and resistance zones drawn, like you might see that the market is going up in the first 5-15 minutes of the day opening up, and it might be going right into a resistance zone. And soon as it hits that resistance zone and it taps that resistance, that's when you all of a sudden just see the price peel back and pull right back down. And to me, what that is it's a lot of people, when the market opens up, it's a lot of people buying that stock. And then for whatever reason, the institution, hedge fund, whatever, they just dump. Soon as price hits that particular level, they just dump all that. And the price shoots down. And it shoots down very quickly. Like they call it like liquidation. So yeah, it's important to know where the support and resistance zones are, and that's something you do on the higher time frames. You don't want to look at the lower time frames to see like where is the support and resistance. Typically, I'm only drawing support and resistance zones on the higher time frames, so like 1 hour time frames, but sometimes I will draw, especially if I'm day trading, I will draw support and resistance zones on like the 15-minute time frame. If you're looking for a longer time frame of support and resistance though, I definitely would say to draw that on the 1 hour, at least the 1 hour time frame. Number 7 rule is wait for a zone to be retested and rejected. And number 8, don't be anxious because the price will come back. Like it's gonna come back in the direction for you to get an entry. It really always will. It may seem like it's not, but it always will. Like, and that's something like I've had to find out like the hard way. Like, just be patient though. If you ever anxious, honestly, if you ever anxious about like, oh, I feel like I need to enter in, I gotta enter in, put your phone down or walk away from your computer. Give yourself 5-10 minutes. Walk away, because you're gonna end up doing something you regret. You're gonna end up, and when I say that, I mean you're gonna end up getting in a position that's not going the way that you want. So, just from my experience to you, like when you're feeling anxious, don't do anything. Like if you're feeling anxious, it's not the time for you to get in. So, yeah, those are my 8 rules that I have right now for my trading that kind of just governs my overall trading. I don't do all of it all the time, but honestly, I feel like if I did do it all the time, I would be in a much better position right now. But yeah, this is just something like I can look at that, take that, digest it how you want to. Just trying to get y'all a little game from what I've experienced and what I know in the trading world when it comes to options and entering and exiting your options, figuring out when you want to get in, when you want to get out, how long you want to hold it. So yeah, more videos to come. No man, make sure y'all like and subscribe if you like this video. And also, if you have any like trading rules that you live by that uh like that I didn't list, like they really help you, like hey, we all here to help each other out. At least that's what I'm here for. So if you got any trading rules that you kind of live by, you're day trading, yeah man, drop your rules in the comment. Like drop some things that kind of govern how you trade in the comments and let me know. So maybe you might put me on to something. But anyway, it's your boy Big Voss, Voss Talks TV. I'm out.